Alright, so in this video we're going to talk about Supermicro, and if we scroll out to the monthly chart, we can see price had a great early first half in 2024 and then a lousy second half in 2024. But the worst is over because price is supported by buyers at this monthly buy level at $23, and that was formed from this rally, basing candle, and then rally. Price comes back, fills those unfilled buy orders, and then shoots all the way up to $120 before crashing all the way down to find those same buyers continuing to protect this level at $23. Now, before we continue with the analysis, let's actually get into the latest news on the company. So Supermicro stock received an upgrade at JPMorgan to neutral from underweight after the AI server maker had cycled past the uncertainty related to the SEC filings and anticipated benefits from increased demand for Blackwell-based server shipments. Now, JPMorgan analysts also pointed to the higher average selling prices, which are contributing to revenue growth, but voiced caution regarding potential margin pressures due to a competitive market landscape and elevated expenses aimed at improving internal controls. Now, Wall Street firm has lifted its Supermicro revenue forecast for the next 12 months, driven by recent positive developments, including a better supply ramp for Nvidia. Now, JPMorgan has also raised its December 2025 price target for Supermicro to $45, and that's up from the previous target, applying a 10x earnings multiple as opposed to the former 9x multiple. Now, the company is anticipated to invest heavily in inventory to support revenue growth, which may lead to additional debt raises beyond the recent convertible note offering. This is projected to increase interest expenses in fiscal year 2026 and 2027, potentially limiting the upside to EPS, analysts added. Nevertheless, this is the monthly chart, and again, the worst is over as buyers are willing to continue to step in and protect this $23 level. Now let's zoom down to the weekly chart. And what you can see, you have some consolidation between a wide range, $20 and say $65. Now let's zoom in even closer, go down to the daily chart. And what you do see is you have some consolidation. So a breakout is inevitable. Now, what direction? Only one can only imagine, but you do have this support resistance band at $50. You do have the 200-day moving average pointing down. That's serving as dynamic resistance. However, again, the worst is over, and so for conservative investors, your reward to risk ratio would decrease if you wait for a breakout and a close above this $50 level. For the aggressive traders, you can start to get long now in anticipation of price moving higher with Nvidia, with the semiconductor sector, with the broader markets. All right, we're going to zoom down one more time frame, and we're going to go to the 4-hour chart. Now, if you do get a breakout to the upside, there's nothing stopping price from getting to this $50 level, and you do have this drop, basing candle, and then the drop. So get a breakout. This is your first target. Second target is going to be this level at $55. That was some support, now resistance. And the medium term target is going to be the most recent highs near $65. So you got three targets, one at 50, one at 55, one at 65. And those targets should be hit later this year. We might see a little bit more pain over the next several weeks, but afterwards, broader market should resume their upward trajectory as the Fed starts to cut interest rates later this year. Thanks for watching. Subscribe. Please like the video.